A massive rotation is happening inside the Magnificent Seven right now. And if you're not watching one specific ticker, you could miss the entire trade of early 2026. Welcome to Winds of Thought. Let's be real, the first week of trading has been a wild ride. The broad market hit new highs, only to give back a big chunk of those gains by the close. All of that noise is distracting us from the real story, which is the significant shift in capital happening within the mega-cap tech space. And by the end of this video, you'll know exactly which stock is positioned to lead for the next quarter, and which one might be setting up for a painful drop first. Right now, major institutional money is quietly moving out of some of last year's high flyers and searching for new leadership. The narrative for 2025 is being written this very month, and the early leader is not the one most people expect. Today, we're breaking down the critical charts for three key players, Nvidia, Meta, and Tesla, before revealing the single Mag 7 name that says flashing the strongest buy signals on every technical metric I track. First, let's ground ourselves with Nvidia. The chart here is screaming indecision. Since that post-holiday surge, the price has been moving almost perfectly sideways. This is a classic coiling pattern. It's building energy, and the next decisive breakup or down will be powerful. Support is firm around the $185 zone, but if that level fails, a sharper correction is likely. Conversely, a sustained break above $192 resistance could ignite the next major leg higher. The takeaway? Nvidia is at a pivotal point, not a trending one. Sideways action isn't boring. It's the market loading its next big move. Now, over to Meta. On the weekly view, we see a fascinating story. The stock found a solid floor at the $600 psychological level, rallied hard to $700, and has since entered a tight consolidation range. My game plan here is straightforward. A confirmed close above $666 is a long signal. A confirmed close below $642 opens the door for a retest of that $600 support zone, which, paradoxically, could be a fantastic long-term entry point. I remain structurally bullish on Meta's AI-driven story, but smart trading means respecting these immediate levels. Before we get to today's top pick, we must address the clear laggard, Tesla. The chart here shows undeniable weakness. An ascending support line that has held for months is now under severe threat. The recent failure to bounce from the $430, $436 area is a red flag. The path of least resistance appears to be down toward the $400 level, and potentially even a test below $395. This isn't a doom and gloom call for the year, but it strongly suggests Tesla needs to flush out this weakness and find a stronger base before its next sustained uptrend can begin. If you're looking to add, patience for a better entry is likely to be rewarded. So, with Nvidia coiling, Meta consolidating, and Tesla weakening, where is the smart money actually going? The answer is becoming crystal clear. The strongest technical setup in the Mag 7 right now belongs to Amazon. Think about it. It was the relative underperformer in 2025, which means it didn't experience the same extreme euphoria. Now, with its cloud and AI initiatives gaining massive traction and advertising revenue soaring, the fundamental story is catching up. But the chart is what confirms the thesis. We're looking at a clean, multi-month ascending channel on the weekly chart. This week's price action represents a powerful breakout from the upper boundary of that channel. The key level to watch now is $237. Any pullback that holds above that level should be considered a potential buying opportunity as the new trend establishes itself. The next major targets? First $252, and if momentum holds, a run toward $300 this year is absolutely in play. The best trades often emerge from the shadows of last year's disappointment. I use a proprietary scoring system that evaluates price, structure, momentum, and volume. For Amazon, that score is currently above a 7 out of 10, and climbing a strong trend-up signal. My core trading discipline is to follow the trend, use stop losses, and control position size. Right now, Amazon's trend is your friend. Of course, manage your risk. A break back below $237 would signal the need to re-evaluate. So, there you have it. The January rotation is separating the leaders from the laggards. Amazon sits firmly at the top of the institutional buy list, while Tesla works through its technical baggage. Meta and Nvidia are in wait-and-see patterns. As the old market saying goes, as goes January, so goes the year. That puts Amazon in the pole position for 2026. If this deep dive analysis clarified the market rotation for you, smash the LIKE button. It truly helps the channel. And make sure you're subscribed to Winds of Thought so you don't miss our next breakdown. We let the price action tell the story. Now, I want to hear from you. Drop a comment below. Which Mag 7 stock are you watching most closely for Q1, and why? Let's get a discussion going. Peace and clarity on your journey.